These days, you can't go anywhere without hearing about soaring house prices. It's the talk of the town. Whether you're at the grocery store, chatting with friends, or scrolling through your newsfeed, headlines scream about record highs, and everyone seems to have a story about a house that sold for way more than expected. From big cities to small towns, everyone's puzzled. How did buying a home get so out of reach? It's not just a problem for one area or one group of people. The confusion and frustration are everywhere, stretching from coast to coast. Take the Millers, a young couple who saved for years, only to find mortgage rates had jumped when they were finally ready to buy. They'd done everything right, cutting back on expenses, skipping vacations, and putting away every spare dollar. Suddenly their dream home was just too expensive. The house they'd pictured raising a family in slipped out of reach almost overnight, leaving them feeling defeated and unsure of what to do next. Their story isn't unique. Families everywhere are facing the same struggle. It's become a common tale. People working hard, saving up, only to find the goalposts have moved. The jump in mortgage rates has turned house hunting into a stressful ordeal. What used to be an exciting search for a new home now feels more like navigating a complicated maze, full of dead ends and tough choices. People are left wondering, why is this happening? Will rates ever come down? Is it even possible to buy a home anymore? Or is it just a dream for most? The dream of homeownership feels further away than ever. For many, it's starting to seem like a distant goal, something that might never be within reach. It's a tough market, and it's changing the plans of hard-working people across the country. Some are putting off starting families, others are moving back in with parents, and many are rethinking what their future might look like. Everyone's searching for answers and hoping for a break. People are looking for any sign that things might get easier, that prices might drop, or that rates could finally go down. So Ganspuris, Sadburdin per dog. What's really going on behind the scenes? Let's dig in and uncover the reasons why the housing market feels like such a puzzle right now. So, what's a mortgage? Simply put, it's a big loan to help you buy a house. Most people don't have enough cash to buy a home outright, so they borrow from a bank. You pay the bank back over 15 or 30 years, with interest. That interest, the mortgage rate, decides how much extra you pay. When rates are low, monthly payments are manageable. When rates rise, those payments can become overwhelming. Mortgages make homeownership possible for most people, but the cost of borrowing is crucial. If rates go up, some buyers are priced out. That's why everyone's so focused on mortgage rates. They can make or break your home buying plans. Next, let's see why those rates are climbing. 11. Why are mortgage rates rising? If you've been house hunting or just keeping an eye on the news, you've probably noticed that borrowing money to buy a home is getting more expensive. But what's really behind this trend, and why does it seem to happen so suddenly? It starts with the Federal Reserve, often just called the Fed. This powerful institution acts as the central bank of the United States, and its decisions ripple through the entire economy. The Fed's main job is to keep the economy balanced, making sure things don't get too hot or too cold. Right now, it's focused on fighting inflation, which is when prices for goods and services rise across the board. Inflation means your money doesn't go as far as it used to. Groceries, gas, and even your morning coffee can cost more, leaving many families feeling squeezed. To slow down inflation, the Fed raises its key interest rate. This makes it more expensive for banks to borrow money from each other, which is supposed to help cool off spending and bring prices back under control. But banks don't just absorb those higher costs, they pass them on to you. That's why when the Fed raises rates, mortgage rates usually climb too, making home loans pricier for everyone. The entire financial world watches the Fed's moves closely. Mortgage lenders, banks, and investors all adjust their rates and strategies based on what the Fed does, creating a ripple effect that touches nearly every part of the economy. The goal is to cool off the economy just enough to bring prices under control, without causing a recession or making borrowing impossible for most people. For homebuyers, though, this means higher monthly payments and tougher choices. Some may have to settle for a smaller home, wait longer to buy, or rethink their budgets entirely. It's a tricky balancing act for everyone involved. The Fed tries to keep the economy steady, but sometimes things get messy, and not everyone comes out ahead. And remember, the Fed isn't the only player in this complex game. Banks, investors, and even global events can influence what you pay for a mortgage. So, how do banks decide your specific mortgage rate? Let's take a closer look at what goes into setting those numbers. Banks don't just pick a mortgage rate at random, they look at government bond rates, especially the 10-year Treasury note, which often moves in sync with mortgage rates. Banks add a bit extra for profit and to cover risk. Your personal finances matter too, especially your credit score. A high credit score means you're seen as low risk, so you get a better rate. A low score, you'll pay more. The size of your down payment also counts. A bigger down payment can get you a lower rate. It's all about risk and reward for the lender. Every detail, from your credit to your savings, shapes the offer you get. But there's another big factor: how many homes are actually for sale? Here's the other problem: there just aren't enough houses for everyone who wants one. When supply is low and demand is high, prices soar. Buyers compete, pushing prices up even more. Lenders know people are desperate, so they don't have to offer low rates. High prices mean bigger loans, and with high rates, it's a double whammy for buyers. The shortage of homes is making things even tougher, and there are still more factors at play. Mortgage rates are influenced by more than just the Fed and housing supply. Global events matter. Economic crises or booms elsewhere can push U.S. bond rates and mortgage rates up or down. The type of mortgage you choose matters too. A 30-year fixed-rate mortgage keeps your rate steady, while a 15-year loan usually offers a lower rate. Adjustable-rate mortgages start low but can rise later. Lenders also check your income, debts, and overall financial health. Too much debt? You might pay a higher rate or get denied. All these details combine to determine your final mortgage offer. It's a complex puzzle with every piece affecting your cost. So, what's next for buyers in this tricky market? 12. So, why are mortgage rates high? It's a question on everyone's mind, especially if you're hoping to buy a home soon or thinking about refinancing. The answer isn't simple, but understanding the factors at play can help you make smarter decisions. It's a mix of inflation, Federal Reserve policy, housing shortages, global events, and even your own financial situation. When inflation rises, the Fed often raises interest rates to try to keep prices in check, which in turn pushes mortgage rates higher. Add in a limited supply of homes and economic uncertainty around the world, and you get the challenging environment we see today. Most experts think rates will stay high until inflation is under control. That means we could be in for a period of higher rates for a while, depending on how quickly the economy stabilizes and prices settle down. When the Fed feels confident that inflation is cooling off, rates may slowly come down, but don't expect to see the ultra-low rates we had a few years ago anytime soon. The days of rock-bottom mortgages are likely behind us, at least for now. If you need a mortgage now, don't lose hope. There are still ways to make homeownership possible, even in a tough market. Work on your credit score, pay bills on time, reduce your debt, and avoid taking on new loans if you can. A higher credit score can help you qualify for better rates, saving you money over the life of your loan. Save as much as you can for a down payment. 20% is ideal, but even a little extra can make a big difference. The more you put down, the less you'll need to borrow, and the lower your monthly payments will be. Shop around. Compare offers from different lenders. Don't just settle for the first quote you get. Even a small difference in interest rates can add up to thousands of dollars over the years. Consider all your options. A shorter loan term, a smaller home, or a different neighborhood might make home ownership more affordable. Sometimes, being flexible can open up new possibilities you hadn't considered. With careful planning, patience, and a willingness to adapt, you can still find a path to home ownership, even when the market feels tough. It's a challenge, but with smart moves and a bit of determination, your dream home is still within reach. Stay positive, stay informed, and keep working toward your goal.
Dear viewers, I want to take a moment to thank each and every one of you for watching my videos and supporting my channel. Your love and encouragement mean so much to me. However, I have noticed that many of you enjoy the content but haven't subscribed yet. If you truly enjoy my videos and want to see more exciting content in future, I kindly request you to subscribe to my channel, and subscribing is completely free, but it helps me grow, create even better videos, and stay motivated to share some more amazing content with you. So if you haven't already, please hit that subscribe button and join our YouTube family today. Your support means that the world to me, and together we can make this community even bigger and stronger. Thank you so much for watching, supporting, and being a part of this journey. Dear viewers, I want to take a moment to thank each and every one of you for watching my videos and supporting my channel. Your love and encouragement mean so much to me. However, I have noticed that many of you enjoy the content but haven't subscribed yet. If you truly enjoy my videos and want to see more exciting content in future, I kindly request you to subscribe to my channel, and subscribing is completely free, but it helps me grow, create even better videos, and stay motivated to share some more amazing content with you. So if you haven't already, please hit that subscribe button and join our YouTube family today. Your support means that the world to me, and together we can make this community even bigger and stronger. Thank you so much for watching, supporting, and being a part of this journey.